Well, welcome everybody to this week's edition of Market Insights. Here, old pal Steven Sitkowski here with you once again. And I'll share my screen with you because I'm that kind of a guy. I hope you're all having a fantastic day. It is June the 16th. By the way, the markets will be closed on Thursday of this week. Quick reminder that everything that we do here is for educational and informational purposes only. It is not intended as investment advice. So, with that, what's moving the markets? The bets are that the Israeli-Iran conflict will be contained. Apparently, Iran has contacted Israel and said that they want to talk. I mean, the fact that they're sitting there hurling missiles at each other. I was talking to my son earlier today, and he's like, do people not understand this is just crazy? Let's drop bombs on them. They drop bombs on us. We wipe out a bunch of people. Then we come to some truce. And then it happens again and it happens again. And I'm like, yeah, you would think we'd be beyond this, 2025, but that's been going on for thousands of years. Anyway, hopefully for everybody's sake, that gets resolved. Markets are recovering from some of Friday's losses, so that's a good thing. The next Fed announcement is coming up this week. There will be no change in interest rates, but it's always, potentially market moving to listen to the comments of the Fed chair. He'll talk about the economy and what the Fed plans are moving forward. So that's a big deal, even though they're not going to move rates. 10-year Treasury, pretty steady, 4.42%. Oil prices have come down since the conflict has temporarily abated in the Middle East. So we're up, mid 70s. Now we're down into the low 70s. Here's our market breadth. So the two things that I like to look at, this is for last week, advancers versus decliners. So that wasn't good on either the New York Stock Exchange or the NASDAQ. But then we look at 52-week highs versus lows. We are still bullish. 168 to 70, 385 to 195. So both of those look really solid. Last week's winner, Oracle, had a fantastic earnings beat and was up 23%. APA Corp, 13, Halliburton, right? All the energy stuff with energy going crazy. And with conflict, you end up with, a gold mining stock, Newmont going up. Tesla had a great week and some more energy. So that would go to figure oil prices go up, energy companies do well. Had a nice CPI print. We were worried about CPI moving a little higher based on what we saw last month, but for May, it only went up 0.1%. So that's nice. Hopefully, or one would hope that it would have given the Fed some ammunition to be able to drop rates. That's not going to happen. What to watch this week? Let's take a look. So Tuesday we have retail sales number coming out. They're supposed to go down from the previous month. That's a good sense of where the economy is. Retail sales minus autos should be just fine, up 0.2%. I don't think any of the rest of this is going to move the markets on Wednesday. So initial jobless claims normally come out Thursday. They're going to be coming out Wednesday. So they're supposed to come in at 250,000, up a little bit from the previous number. And then we have the Fed rate decision coming in, and more importantly, the press conference. Nothing is scheduled on Thursday. And Friday, we get the Philly Manufacturing Index and the U.S. leading economic indicators. So that one could be interesting. as well. Last week's heat map, Tesla had a great week. Oracle, Palantir, Palantir because of all of the worldwide disruption. Lilly, the energy stocks, did well last week. Year to date returns. So the S&P is up 2.69% year to date, led by industrials, AI data centers, infrastructure, utilities, mostly on the nuclear side, communications, material, and we've only got two sectors that are down for the year: healthcare, and it's not down by much, and consumer discretionary, which has taken the biggest hit. Market sentiment improved for the week. We're almost back to averages. So on average, 37.5% of respondents will say that they believe that over the next 6 months, the market's going higher. We're at 36.7%. And generally, only 31% say it's going lower. We're at 33.6%. So definitely an improvement from the previous week. How much is Fed going to cut? Well, here's the next rate announcement. It's almost 100%. No rate cut, even though Trump called Powell a numbskull. I don't think Powell's a numbskull at all. Seems like a pretty intelligent guy to me, but Trump would like for him to lower interest rates. I would too. I don't think it makes guy a numbskull. Pretty educated guy. So we're expecting no rate cut in June, no rate cut in July, and then the first rate cut is forecasted right now in September, and the next one in December. So two rate cuts this year, two next year, same as we had last week. Check out the charts. It's all in the charts. Let's pull up the S&P 500. There's a 6-month chart. Looks pretty strong. V-shaped recovery down here, cross above the 50-day moving average, hit a resistance level. We cleared that resistance level, and now we're kind of waiting on the next catalyst. And I'm not sure where that catalyst is coming from. Would it be positive tariff news? We've already had quite a bit of that. We're going to be entering earnings season again here in another month or so. It could be that. It's not going to come from the Fed. So we're just kind of moving sideways. 6 months ago, we were at 58.72. Now we're at 60.34. Next level of resistance is about 61.50. If we can clear that, we could be off to the races. So we shall see. All right. Well, I hope you enjoyed that, picked up a couple of things, and I will look forward to being with you again next week. So until then, be safe, be blessed. Bye for now.